Hey everyone, I'm going to go over the EURGBP counter trend long trade that I took earlier this week. As you'll see and remember, I called it out in the weekly commentary that there is a possible counter trend play. And I also posted this in the Discord community within our Phantom charts. So as you'll see, the trend is overall bearish, seeking lower prices. However, we had this large liquidity area and liquidity wick that we were trading inside of and that we were focusing on, and you'll notice that there's a nice 4-hour liquidity wick sitting in there as well. So the idea was for a counter trend play, looking to seek liquidity from higher prices to induce the move and continue to the downside. First areas of kind of target were traditionally the 1-to-5 risk to reward ratio that I look for, and then I'll also be looking to target the swing areas on the 4-hour. So this area here, which we'll cover on the live chart in a very short moment, and also this big area here where is that liquidity wick. Now, if we had pretty much invalidated this area, then I would have been looking for the liquidity wick sitting up here, all the way to swing up towards that 8800 handle. But first target was spot 86, so 8600, so 0.8600, and then I'd have been looking for further upside heading towards that spot 8640. Now, bearing in mind, after 1-to-5, I only run the balance of a trade, so everything else would have been the balance remaining from that position. So moving down into the 1 minute, you'll see just on Phantom charts here that this was how I was viewing the market in live real-time conditions. We had this real nice inducement that was being printed by this descending wedge structure. Then we had that nice sweep of liquidity to the downside, forming our area of interest, our nice demand zone. So I was looking at the 30-second time frame and the 1 minute time frame. 1 minute time frame and the 30-second time frame for me was the core area of this trade, focusing on liquidity, inducement, inefficiency of pricing, so imbalance, and I used the double boss confirmation entry to execute my pending buy limit. So let's dive into the chart, and I will go over this exact trade with you using the replay tool. So diving into the 4-hour time frame on EURGBP. So let's just quickly grab the replay tool and bring it back to here. So as you can see, charts pretty much mirror what I dropped in Phantom charts at that particular time. We had lower highs being printed in the market, but we failed to break this swing low. We created this very corrective structure, which to me is typical Wyckoff schematic, so a nice accumulation. We didn't have any springs accumulation, but overall really nice counter trend play. Huge liquidity sitting inside this wick. We've smashed into the OB or the demand zone that we're looking for. We've pushed up, broke structure, created liquidity, which we've swept, and we started to correct it down to the downside. So jumping into the 1 minute, let's reverse price back a little bit more. So let's go from here. So we can see that liquidity was being induced all the way down. This descending wedge pattern did initiate longs for retail traders, and it would have from this area here. However, all institutions or all traditional pricing methodology is done as it's actually smashed to the downside, which we had this arrow pointing and highlighting that move to the downside. It was a little bit longer. We thought that it actually may invalidate the lows. However, as price started to move down to the downside, and of course it moved in a very corrective manner, you'll see as we start to move in. So then we've started to push up. We've shown some nice intent. We've potentially left some imbalance, which we'll see on the following candle. This area here was my zone. So if I jump down into the 30 seconds, you'll see we had a real nice 30 seconds area of interest that I highlighted. No real imbalance. It was just pretty much from this area here that we had. So I decided to take the 1 minute area of interest. So this 1 minute last sell before the buy. I refined it to the buy candle just because price was equal to the low. And if we move this to the right, you'll see that the wick itself breached the previous sell low. So for me, I refined it to the buy candle in order to get a more precise reading on overall price range. So as price started to push up, I was looking for that first break of structure, which we'll see on the 30 seconds once we do it. So you see that we've broken structure to the upside, creating our first break of structure. Really nice full-bodied candle, impulsive candle, and it also engulfed that previous buy candle as well. So all previous price action was engulfed from that previous sell candle. My apologies. Quickly jumping into the 30 seconds, we'll see the gap up. So there's decent amount of liquidity pushing this move or fueling this move to the upside. Now again, don't just jump into the 30-second time frame just because I'm showing it on this trade recap. Just be mindful of how to read liquidity, how to read price. Price then started to correct, as you can see, which potentially meant it was coming back to fill this liquidity sitting inside here, which we've done, and then we started to correct pretty much all the way along, creating equal highs and building liquidity from the downside, i.e. through an ascending trend line, which you can see we've had the 1, 2, 3 tap. Now we had this break to the upside, sweeping all of that liquidity that was induced inside here, and we're also about to make equal highs. So we've made equal highs, and I'll just touch that on the 30-second. So my thinking and my viewpoint at this point was we had this break on the 30 seconds, and I wasn't entirely clear whether it had closed on the 1 minute. Yes, we can see that we've got 2 clear candles, 3, 4, 5, maybe 4 candles or so that close above this break. So realistically, there is going to be a 1 minute break of structure. However, for pure clarity, for pure understanding and direction, I went back out and zoomed back out to the 1 minute time frame just to make sure that we did have a break of structure. Now, if we look at price action, once we've broken that structure, what have we done? We've not continued to the upside with intent. We've created a curved, rounded top, so that an arc in formation, and we're starting to correct back in. Now, realistically, we could have taken a potential trade from here, but as you'll always be aware in my commentaries and in my Q&A sessions, I tend to trade off of the origin or the extremity of that move, which caused the double breaker structure or was the cause for higher prices. So we started to push down. We didn't really have a reaction off of this area of interest, so I'm pretty glad that I didn't take a trade there. But if I didn't take a trade and it had gone, yeah, of course, I would have wished, classic scenario, isn't it? I wish that I took that trade. But I miss more trades than I take on the basis that I always take the extremity of the play because the probabilities increase in my favour based on my strike rate, based on all of my case studies and my back testing. So price has now pushed in, and this is exactly where we got filled. So we got filled at 0.85551. So spot 85, 55, 1 got in on that wick, which I'm quite surprised we actually got filled on because the spreads on EURGBP are a little bit wider than most majors and G10s. So if we look at this spread, my risk reward tool, I had a 3 pip stop, so 30 ticks, which on a 30 seconds and a 1 minute time frame looks extremely wide. Now, a lot of people may be asking why I didn't cover these lows. The primary reason I didn't just cover the lows on this long was because EURGBP has a floating spread between 1 and 3 pips. So I could have actually got away with a stop about here, which covered that low for 1 pip, so 10 ticks. I could have realistically got away with even tighter, so like a 0.07 pip stop, so 7 ticks, right? And it wouldn't have taken me out. However, I would much prefer to be in a trade and run for 10, 20, 30R than be in a trade that has the potential to run 60R and get tagged out because of spreads and typical inducement of volatility. So got tagged in. First target was 1 to 5. Main targets was the spot 8600 handle. Let's play price forward and just kind of see how liquidity was built and just see how price pretty much reacted. So you can see as soon as we got triggered in, we had a retest of that area and then we pushed to the upside, and we've just been pretty much building liquidity all the way up. So we tapped that 1 to 5, took a decent portion off of my trade and moved my stop to break even. Now my trade is risk-free. I've locked in and crystallized a 1 to 5 risk to reward. I've crystallized a huge amount of profits in terms of notionals and percentages, and then just let liquidity build up and just pretty much tracked pricing all the way up. So you can see that we had a retracement here to fill that liquidity and all of the inefficiency that was sitting here. We've created liquidity. relative equal highs, trendline liquidity, and we've now smashed those. We're building trendline liquidity again. We smashed through that. Now for me, that 8600 handle is that real target, okay? So sitting up here at 8600, I did then take some more partials around this area here. I think it was like 85.92, I believe, but we'll see that in a second. Price then pushes up to the upside, smashes into my 8600 target. Now we get quite a deep pullback. So as you'll recall, on the steals I highlighted that the big swing point would have been that 86.30 level, okay? So let's play price forward. You'll then see that price is just very much corrective. We've created reaccumulation, a distribution into an accumulation, which we'll see now where we've created this range here, which is the cause for higher prices. So we've created the seller's climax, the automatic reaction. We'll get a test to the downside, push back up, and then we'll start to see the intent kick into the market, and then we'll see that break above this swing high where the equal highs and relative equals and liquidity have been built. As you'll notice, we've now swept all of that liquidity to the downside, and we're now correctively inducing with that price to get pushed to the upside. So let's move out to the 15-minute time frame. Let's speed this back up. You'll see that then we've got that inducement into the market. Real nice push. Price actually broke above this area here. So of course, like I said, 86.30s, 86.35s were the real target, and I'll show you on the high time frame why. So we've got that. Now for me, if we actually go to the very top of this trade with a 3 pip stop, so a 30 tick stop, was just over a 28R trade. So my balance was still running at this particular time, as I'd taken partials here, and I had taken partials at the 1 to 5 area. So I'd taken partials here and here, and then I left the balance to run up towards my higher time frame target. So as price started to get in here, I noticed that we started to actually create further breaks of structure to the downside, and I was thinking, okay, let's look to switch this trade. So as you'll see, I did call that on the Discord community as well, looking for the counter trend short. So currently running at 1 to 3, 1 to 5R are done. So currently still swinging euro sterling. However, if you zoom and take a look at the 4-hour time frame, we've reacted from bearish supply zone. And if we then refine this onto the 1 minute, you can see that we've now positioned ourselves for a short to close the trade after liquidity is being created, and we've now formed a double break of structure, creating the idea that price is now seeking to continue to the downside. I am monitoring PA on the 1 minute time frame to seek the best possible exit as price taps into my short interest area. So highlighted that on the 1 minute time frame, as you can see. And then if we just show we had that 1 minute break of structure, continue to the downside. We now are looking for a successful retrace, which we've got. Successful retrace. Now for me, I wasn't out of the trade yet. I'm still running in this long. If I get this second break of structure, I'm out. So second break of structure, you'll see that price starts to arc. So I did genuinely believe that price was now looking to seek higher prices to tap into this area here, where I'd have looked to get short this trade. So I've now closed, or I'm now in the process of closing my trade, and that would be using magic keys, just so everyone knows. So we now continue to this, looking for that pullback to the upside, looking to get short. Could have potentially taken a short from here, as this was where price was the cause for lower prices. However, for me, I didn't actually get into this, and then I was already out of this trade, and price then started to collapse. So overall, really, really nice trade. A 1 to 28R trade on offer. 1 to 5 smashed, and then we had more profits taken at 1 to 11. So the balance was then running, and we finally took profits at around 22R. So overall, a 1 to 22R trade in its total net position, or gross position, depending on how you want to look at it, depending on how much risk you took as well, with an overall risk to reward ratio on the table of just over 1 to 28R. Now, overall, a really, really nice trade. So hope you've enjoyed the breakdown. This will be the first of many. I'll also be doing a breakdown on the dollar CAD longs, one from Friday, which I didn't take, but I touched upon it within our community in the weekly commentary. and then the 2 longs that favoured themselves on Sunday night and Monday London session open. But I hope you've all had an incredible week. The markets have been absolutely fantastic. I know some people in the community this week are smashing well over 300R for the week. So if that is you, absolutely, huge congratulations to each and every one of you that have done that. But if it isn't you, don't worry. It takes a long time to become consistently profitable in any method, any ideology, any methodology, any edge within the financial markets. With Phantom, it's no different. The only difference is our risk to reward ratios are incredible. The community itself is fantastic. And the team that I am surrounded by are some of the best in the industry, in my opinion. So take your time. Remember, there's a roadmap within Phantom. We have a 12-month roadmap for each and every one of you to go from 0 to fully funded throughout FTMO, funding talent, and the few proprietary trading companies that are going to continue to launch with and through Phantom for the remainder of 2021. But enjoy the rest of your trading week. Keep your eyes out for the midweek commentary, and I look forward to speaking to each and every one of you and answering any questions you may have within the Discord community.